Stocks and bonds leap. The shorts get in really deep. And the world thinks POTUS is a creep. More about all that as we start the show.
Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone exciting, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week and a look forward at what might happen in the next week. And hopefully lots of good ideas and opportunities for you throughout the show. Well, the stock market continued its surge this week, accelerating to new highs. Tech stocks, they were the leaders up until sometime around midweek, and then they started to stall. But it didn't matter because those stocks that were laggards, especially the second and third tier in the Russell Index, picked up where the techs left off and drove stocks higher again. As a matter of fact, the Russell had a really strong surge towards the end of the week. There was a brief dip on into Wednesday. That's similar to what we had expected to happen. That came after Comey, ex-FBI head, said that he would be testifying, and that's all around the Russian probe. And that sent the market down pretty sharply for just a really brief period of time. But then that disappeared and buying panic came back into the market. President Trump, he left the Paris Climate Accord, and that just simply, because nothing happened after he did, gave more energy to the stock market as it continued to surge on the upside. It's somewhat of an unusual condition when the bond market is going up and the stock market together. In recent decades, they have moved pretty much counter to each other as bonds have been a flight to safety, but now the bond market's moving up based on some softer payroll numbers that we've seen, and maybe it's just not true that the Fed is going to be able to raise much past this June. June is probably pretty much baked in the cake here, and the bond market may be getting ready for a stock market that is pretty bubbly on the upside going into some kind of a correction in here. So bonds go up pretty nicely during this week, ignoring this stock market rally. So the stock market moves up about 1 to 2% depending on the index that you're looking at. The Russell was the big mover, up around 2% or a little bit more, with having a pretty rough start of it early in the week and then really surging on Thursday and Friday. Bond market, as we said, up, and the weaker payrolls helping, but it was a 2-point gain on the 30-year bonds. That is a pretty strong gain for the bond market. Dollar moves downward slightly. That has been in a very weak technical pattern, and we have been really stressing that situation, and this week gets hurt by the lower interest rates. Remember that as interest rates go up, then it is believed that money moves into that country because, well, money finds the best place where it can get a return. So in this case, interest rates going down this week, the dollar then moves slightly to the downside. The euro currency pretty firm when we look at that. So again, with interest rates moving down and the dollar moving down, gold got a bid. We expected gold, based on our short-term view that we did for our members last week, to get up to about $12.80. It did pop over $12.80, gaining some $20 on the week, hit that target that we had put in there. Silver did the same thing. Our target in there was $17.52, and it got up there there, up better than 30 cents on the week. So nice performance out of the precious metals. Oils, which apparently had a lot of buyers when they thought that OPEC was going to do something crazy, like cut their production again. Well, they wouldn't do that because they're cutting their own throats, and they have a huge financial demands. So they just extended out a week ago for 9 months their production cuts, and oil really got hit on it, and then oil got hit again this week, about $1 on the downside. So we think the oil pattern, it might get some bounces in here, but we don't think that it's got a lot more on the upside at all in here until it gets into a full-fledged correction. Our intermediate projection is to get under $44 in coming weeks in the oil market. Might get a bounce up to 46, 47, but then we think down again. Oil right now, I'm sorry, it is 47, up to 49 or 50, and then down again. So the stock market moves higher and remains on this magical mystery tour. I've been around a long time in the markets and seen many panics and many manics, and that's what we're in right now, is a manic situation. Even President Trump pissing off the world and canceling at least the United States involvement in the Paris Accord, that didn't mean anything. And if anything that it meant, it's probably positive, because what it meant was that President Trump was sticking to his promises that he made during the campaign, and that he would be more apt to really push through some version of the tax plan, some version of the healthcare plan, all those things that he could possibly do with a 51 vote in the Senate. So there is things that he can get done that way. Mitch McConnell, Senator Mitch McConnell, doesn't want to do it that way. He wants to be able to stick to the 60 vote. So he's getting some pushback in there. But basically, these markets that we're seeing are hopeful that the president will be able to get his stuff done. Manic markets like this one price in normally way more than reality. The reality of the benefit of these programs, the reality of the ability for the programs to even get passed. Maybe Bitcoin soaring to $28 was a tell to us that we were entering into manic market situation, and that certainly is where we are right now in the stock market. These type of markets, like I said, I've been around a long time. I've seen a lot of them. I wasn't around in '62. But there was one similar to this in '62 that ended up with a 27% crash, in 1987 a 43% crash, and 2000, which had the .com manic period, was a crash of some 40-something%. And, overall, when you get into these periods where bulls think that they can just buy them with reckless abandon, and the shorts get it shoved up their you-know-what, those periods end, and then they end in an ugly way. Whether we're coming up to a bull market top, well, nobody can really tell that, right? Actually, big corrections come fairly regularly, and you can see that in my big picture analysis video I recently did. And based on the timing I've been talking about, which was the correction coming from sometime June, July, maybe into early August, I think we're getting into that time period right now. In fact, I think it's very soon. Don't be surprised. Talk about my short-term view coming up at the end of the show. So don't be surprised if this ends up to have some ugly big correction and maybe some big reversal day coming up pretty soon. Then that might be when they ring the bell. All right, so now let's take a look at what happened in the stock market in this past week as we look at the 60-minute chart of the S&P 500. Get that set up for you right now, and there is that chart. So what this chart is for the new viewers, the gray area there is the trading during the week. And the white area is the trading during the regular session, the regular trading hours. You can see that what we had talked about last week was that fall into midweek and then move up. We actually thought the S&Ps would get up to about 24 and not be able to get any further than that. So we got this part of it right, this part and this part right in here. But then we're wrong in how high they got up, as we saw the S&Ps move up to heights of a surprising, 24.38 or so. During the week, Memorial Day, of course, Monday, the markets were closed. Not much happened in Europe. On Tuesday, Fed heads were out talking, said it's pretty likely that they're going to be raising in June and that they'd start talking about reducing balance sheets. Markets didn't care much about that. Grains had a big crack that day on some good weather, and Amazon topped 1,000 that day. Oil really started to get hit again on Tuesday. On Wednesday came that news. You can see that big move to the downside right in there. The market reacted to Comey saying that he was going to testify, and that could implicate the administration, and stocks had that big downside move and came down. We had talked about 24.03 as the potential midweek low, and that was just absolutely nailed, that you can see right there. And U.S. stocks, that early failure didn't matter because buyers came in pretty much as usual. On Thursday, strong stock markets really around the world. The ADP number came out really strong. People were thinking that we were going to get a strong number here on Friday, which didn't happen. And the Fed heads were out again talking about rate hikes in June. When Donald Trump pulled out of the Paris deal, nothing happened. In fact, that was right around here, and then all of a sudden you could see it accelerated up through the close, so there was a big surge all day long. And then when the employment numbers came out on Friday, you saw the market move to the downside, and then, of course, the buyers came in, as they do now every single day, pushing the market up to these lofty highs that we see right now with a lot of good strength. Europe was really strong. Japan was really strong. DAX up 1.6%. Nikkei up 1.8%. Those payroll numbers were a big miss, and that really got the bonds excited. So bonds went up, stocks went up. And they even reduced the previous 2 months by 66,000. So things are really sluggish, and based on much of the other data that's coming out, I don't think there's a chance we're going to see that strong 4% growth quarter that one analyst just came out with. I don't think so. But anyway, stocks, they just keep coming, and you can see as they move up in here that this is another strong Friday as we are in the last hour of the day. Take a look now as we look at the calendar for the week, and there is almost nothing to show you. As we switch over to that, there's one earnings report of the 320 stocks that we follow, and that is CSIQ. That's on Tuesday. That's a solar stock. No other earnings report for the week. The biggest event for the week, biggest news item, may be the ISM non-manufacturing index on Monday, but that also is not normally a market mover, and that should be it for the week. So the market's going to be all on its own without a lot of news, unless we get some more news out of the FBI probe or something like that, but it doesn't seem to matter. I think this week is going to see some volatility, both sides of trading here coming up. Let's take a look at the best and worst stocks for the week in one moment. All right, even though I said that earlier in the week that the tech stocks were beginning to stall, there actually were some tech stocks that did pretty well. And the first one we're going to look at is Ciena, C-I-E-N. This is in the networking category. Ciena is like Juniper or Cisco. Those are the competitors in that sector, and Sienna has had a good time of it. You're going to love the cyclicality if you're a student of market cycles when you look at this, because it's pretty gorgeous when you look at this chart. Let's just look at the last 3 cycles, 4 cycles right in there, and you could see the cycle brackets are on the bottom, and those are our guides to timing. So you could see that this was a rising phase, and this is a rising phase, and that is a rising phase, and sure enough, you got another blast to the upside right there. Now, the important thing when you look at this is that when you have a bullish cycle like this, then the odds of the next cycle making a higher high are better than 3 to 1, and you could see that one right in here, better than 3 to 1. That's the fib target zone up there. The 100% fib and the 78.6% fib often make up the zone that these stocks move up into. So we put those now on our charts, especially in bull markets. We put them on declining stocks on the way down and bullish stocks on the way up. And a lot of them are hitting these fib targets right now, up 18% on the week on strong earnings, strong revenues in this category. So don't be surprised if Lululemon, that's coming next, if Sienna or Juniper are good looking stocks also. Take a look here as we look at Lulu right in here, and this has been a horrible stock, right? You could see the same cyclicality that's in here as I just showed you. There are 2 cycles that you can see in here, a big one right in here and a smaller one in here. Those are called cycle harmonics when you get that, or a harmonic family, and this is the period it entered into for a rally. So that's not a surprise that week right over there. Earnings were good. Of course, that's a big relief because they expected in this retail group for them to be a lot worse, and they guided up, so that got it to move up. You could see that this is still a downward pattern that we see in here, and I want you also to note that the fib targets, in other words, between the 78.6% and the 100%, that was the downside target, and that's where it came down to. So it was really beautiful. Works for bullish and bearish stocks. And now you can see moving up towards that resistance zone. Being that this is the first real week up here, we would expect that this area of resistance, 57 to about 60, will be tested on the upside. It's pretty early, even in a bearish scenario, for any kind of a topping in here, just 1 week up. So we think that that's pretty buyable if you get a pullback in there. Take a look at Decker, D-E-C-K, as we stay in this retail category. Here's a nice base that was built in here in Decker. They're up 8% on the week. Here's your bullish cycle pattern right there. You see that? So that's the timing. In other words, this is the low, and then this is the low, and then this is the low. You can see that this is a little longer cycle, but that's not unusual. And now, guess what? This rally takes it into the fib extension zone above the 78.6%, which is pretty remarkable when you look at that for a stock that's in this retail category. You know, previous week the stock reported really good earnings, and you could see that it is moving up nicely again. Now, this target zone and this group, I would guess that this stock is not going to be able to continue with any kind of a strong move on the upside in there. Take a look in the retail group again at Dollar General. Now, this is again a similar pattern. You could see the timing cycles in there. How beautiful is that? And so in this case, this was kind of a jagged cycle, and you would expect it to get up and test this level right over here, which is just about done. Resistance is 79.5 to about 80.5 or 81. We kind of think it's going to get up into that area, but again, this is a tough group, so I have some doubts about that being able to continue that strongly on the upside. It's not always news that moves stuff. Sometimes, of course, it's just bull markets, and some of the industrial stocks have started to catch fire and move on the upside. Also, the next one we're going to look at is Borgwarner, BWA, up 10% on the week. Noticed Fluor also getting a bid in there, and of course, Caterpillar moving up in this strong market. So Borgwarner moving up, and you could see in there that fib target or extension zone. as it starts to move up towards that. Now I want you to look at, this is these cycles in here are what we call ideal cycles, and an ideal cycle peaks about halfway up and then comes down equal amount. That is an ideal cycle. It's pretty rare when you see that. As a matter of fact, bullish cycles go up for a greater period of time and correct a little bit, and when you see that, you get this trend, this upward stair-step movement, and then this moves up towards that fib target right over there. So Borgwarner, a nice pattern. We're going to look for 47.5 to about 49 as that target zone on the upside, and another nice looking stock when you see that, and nice looking cyclicality. Tsla, TSLA, kind of a cousin in the automotive category. Borgwarner, of course, services the automotive category. This has been an outstanding upside move, and the cyclical patterns in here are almost unreadable. They get unreadable, and we call this swamping, where you get only, you get these cycles that are saying correct, but the upward cycle is so strong that it swamps the correction, so you don't see very much of it. And then when this comes in, it resumes again. You get that kind of V pattern that you had right in there, and then continuing up. So in this case, you could see that. Again, you could see this fib target zone in here. This stock moves up as some analysts have upgraded it. Now they move their target up to 350, which is not that big of a deal. This the target zone in here is, we'll call it 353 to 369. That would be our guess of where this would finish, and then start to move down. If you look here where there were 1, 2, and 3 cycles pushing down right there, you got into a significant correction. When you had 1, 2, 3 pushing down, you got into a significant correction. We've got about maybe 3-4 weeks before it gets into that period over here, but there will be a significant correction. It is pretty much written that these patterns work that way. So Tsla may have a little bit more room on the upside, and then we think it's going to move down. We were really positive some months ago on the gambling stocks, especially Wynn, which had this massive consolidation pattern. Las Vegas Sands, they came out with some news that said that the Macau numbers in China were better. Were better, and that gave the stocks a lift. They're up 7%, 6% respectively. We'll take a look at those as we look at Wynn Resorts. Remember, we said we saw a massive consolidation pattern. A lot of our traders traded this when the breakout came, and it broke out, went from about 103 up to about 134. So you could see that was absolutely, well, beautiful. We're now getting into this corrective period. Got to our first target right over here, and then blew through it this week as the market has carried it to the upside with those good numbers out of China. We're going to look for a pretty good pullback in here with a downside target of about 125. We think it'll give up about 10 points, then have another rally, and maybe even go to our upside target of about 150 up there on that level of our 50% fib and the second target. So that's kind of a intermediate term look, pull back for maybe a month or more, and then get another boost to the upside. These colored phases in there we put in there, so it makes it pretty clear where it's advancing and where it's correcting, or where it actually turns bearish if there's a red pattern. Las Vegas Sands, let's move in, and you can see this. Well, it's pretty similar, right? Gets up right close to that cycle peak resistance up there of this last cycle right there. I want you to note the cycle breakdown that we put in there. In other words, if it begins to advance off of this low and does what it's supposed to do and then breaks below the low, well, then it declines all the way through the declining period. And you could see that right here was perfect timing. Well, it maybe bottomed a week early and then began its advance. Now, again, this is what we call the right-hand translation. It leaves about a month or 6 weeks to decline. That aligns with Wynn, so they pretty much think that they're both going to start to give ground in here, and it just might be going along with the market correction. Federal Express, we're going to look at this. Now, we did some analytic revision in here. We had a different pattern. When you see these dotted purple lines, you know that we did a revision that makes more sense now to what happened. And this again has some nice nested cyclical patterns that you can see in there. And where we are right now is, and we didn't really know it until just this week where it broke out above this level. That's really what told us about the revision. Now it gets up, look at that, right into that extension right there. Now the ultimate target is above the 78.6, so this stock might make it 211 or so on the upside before it rolls over. If you look at the pattern in here, you could see, that it looks like we're right here, right? So two cycles that are pushing up. You're probably going to get an intermediate correction, some pullback, and then another attempted move to the upside. You had that happen right in here where it had the intermediate correction, another attempted move to the upside, and then corrected again. So that's kind of what we see in here, getting stuck up here somewhere a little bit higher than where it is now in Federal Express. The last stocks we're going to look at in the best of the week, I think, are probably some of the best shorts of the week, and that are the motor stocks. They got some pretty good pops, GM and Ford, but they're in some very ugly patterns, and I want to take a look at those so that you can see. I actually think the timing is such that it's going to be very hard for these stocks to continue on the upside. They are both in downtrends that were established a few weeks ago, and now they're getting a bounce. This is kind of a bounce that's out of character. We had that happen in light crude, right, where the bounce came and couldn't make any sense out of it. Normally when that happens, you're going to get into another move on the downside, and that's the pattern. It's right in this resistance zone right in here. It tags the 34-week moving average. Notice when it did it here, it rallied. When it did it here, it rallied. Now it's coming from the underside and likely to pull down in here. They got lots of trouble. Inventory is just huge. Used prices just crashing. Plenty of big increases in the subprime delinquencies. So they got issues, and I don't think they're going to be able to move past it. Ford's got the same thing going on in here. In this downtrend, it gets a bounce, this time only to the 13-week moving average. The 34 is way up here. So you could actually see that Ford is in worse shape than GM is, and both of them looking in pretty bad patterns. So that's a look at the best stocks for the week. Pretty good solid gains. And now we're going to look at the worst. All right, for the worst stocks of the week, we're going to go into the energy sector. These things got hurt pretty good as oil has been on the weak side. And we're going to take a look first at Whiting, a WLL. Interesting, I did some work on Whiting during the week in one of our videos and said that I'm going to include it because I'll get emails if I don't. There's a lot of people that follow it, and I didn't like the pattern at the time. And then I got an email back said, wow, thanks for doing Whiting Petroleum. So there are really people out there that look at this, and here it is right now, WLL. This is a cyclical breakdown that we see in here. So these are some really big long cycles. When I look at this and it tells me the length of the cycle, 28 bars generally is pretty weak for a cycle. And when I look at the projection on this one, this says down into October. For this stock, it now has an official breakdown. We were cautious about it, and it moves down 14% on the week. First Goldman Sachs downgrades it during the week, and then another analyst downgrades it later in the week. So this one really ugly when you look at that. Take a look at RIG, also down about 7% on the week, as this one has been in the downtrend that we have said goes also into the, late summer here. This one goes into August. This, of course, is an offshore driller. In the natural gas category, Devon right here, you can see another one of these on the downside that we had bearish, and you can see it gets into that fib target zone right now. So we could see it getting down here to maybe 31 over the next month or so, and then get a bounce in there. But this is a really bad pattern when you look at that. Diamond Offshore Shore down 5%, Chesapeake down 5%. One more we'll look at in here in the energy sector is Marathon. This one, ugly pattern. Remember I told you that when they get into red zones is when they end up being in trouble. So this one's got our colored phasing, and this one you can see has no bottom for about 6 weeks. So a lot of these energies are looking very ugly. Got an email recently for somebody that said, boy, I'm glad you did some other stocks and aren't talking about Sears and JCPenney like I do every week and talk about JCPenney going to go broke. But we got to put up Sears this week. They had a security breach added to their other significant problems, and they moved down 12% on the week. That was the worst of the retail stocks. When this stock moved up to 14 and hit that cycle resistance right there, I said, man, oh man, I didn't think this stock had that kind of move in it and likely to move down into this early July period. Well, there you go. I didn't think it would get back to 5.5, but it's all the way down here to 7, so maybe it will get back to 5.5. Again, they've got big problems. Let's look at some other retails. Coors gets hammered in here again. Now, this one we knew had a breakdown in it. How did we know that? Well, because this low right over here, this one, well, tried to get below it. It was running out of time, and then it has that move to the downside right there. So again, this is late July before you get a bottom in Coors. That one is looking pretty ugly. One more retail stock that we'll look at, Abercrombie. I always pronounce that wrong. I think I got it right that time. This is cool because you could see in here the cyclic patterns that we have in here. Remember, cycles are a visual depiction of the money flow, essentially, and there are periods where money flows in and periods where money flows out. And the levels and the interworkings of the multiple time frames tell us about the condition of the market. In this case, the bottom was due right in here. You could see that, and the rally right on time. This is the intermediate resistance zone, so it hits that target right over there because it's bearish, and that's likely the place to stall. We could see it getting up here to about maybe 14 3/4 or so if it wants to keep trying, but it's stalling in this area, and then it would move down again into August when that is over with. So that is a look at the retail category. One more stock in the worst of the week. This one's interesting because there's not a lot of coal stocks that you can invest in, and with POTUS pulling out of the Paris Accord and talking up coal, you would think that the coal stocks would get excited, buyers would get in there. But I think if anything, what it did was stimulate the rest of the world to say, we're in it. We believe that humans are heating up this earth, and therefore we're going to stay in it. And then the coal stocks didn't really react. In fact, CNX was one of the big losers of the week. This is one that I have liked, but the pattern has not proven it at any point, because I thought it was the only coal stock that has coal representation that you could invest in, and there you can see the breakdown. So I put in the fib extensions and the timing. You could see here mid-July right there before the bottom is really due. These are the targets right over here. That's just over 13 and just under 12 and right around 10. I don't think it gets that low. I think you could buy it around 13 in about 6 weeks. That's really where that one goes down to. But you could see the clarity in the patterns in here. In fact, cycle patterns are what makes the chart patterns. When this pattern right in here was turning down, it actually made a left shoulder. When this rally came, it made a head, and then when you got into this corrective period, it wouldn't let the rally come, so it made the right shoulder, and there you could see the right head and shoulders top that formed. There was your neckline in here, and the target is this distance right here, which we're very close to already. So that's how you analyze these patterns that you see in here, and that one is very pretty. If I look at this right over here, you could see the inverted head and shoulders back over here that got formed by the cycle patterns. You could see the left shoulder here, the the head is the pattern completed, the right shoulder, and then the upward break. So these cycle patterns are what tells you about market conditions and timing, and this one's got a breakdown, and I'm not happy about that. CNX, I think wait about maybe a month and a half, maybe 2 months, and then I think the opportunity will be there. There's really not much else that you can do in coal. That is the worst of the week. I'll be right back with my short-term view for the stock market for the coming week. All right, this is our short-term view for the stock market for the coming week. I do this every single week, and I take an accountability of what I said in the last week. Before I get in that, I have a special for you. You see all the technical work that we do here. I do tons of videos every week for our members. We have 9 categories of videos, including this show that you're watching. Tools for Techs, where I look at a whole multitude of different technical studies and ways to use the charts and look at the market. I do stock sectors, where I look at in-play sectors, things that I think are valuable for the coming intermediate term period with a lot of potential trade setups. I do trader psychology. For the last 22 years, I've been a personal growth facilitator, and I combine my knowledge of the markets with my knowledge of the psychological aspects that we as traders deal with, and that is so valuable. I've got great videos in that section that I think are really good, so make sure that you watch that. Future Speak every single Wednesday, where I look at 24 different futures contracts, do this deep cycle analysis where I look at the futures and the indexes in 6 different categories of futures. Incredibly valuable. People continually write me. It's their favorite video that I do every single week. I do big picture analysis where I look at the really long-term pictures of the major markets. The last one I did, I looked at the stock market, talked about the fact that when the regularity of corrections and that the likelihood that when we get into the topping period in this market, which I thought was going to be somewhere between late May and mid-June, which we're at right now. Granted, it got a little higher than I expected, but I thought that we were going to have a pretty sizable correction. You're going to want to see that also. I do IRAMO. In other words, it's videos that suggest ways that you can analyze the longer-term holdings that you have in your IRAs or investments that you have. Really valuable stuff. I do style, strategy, and plan. That's video number 8 category, where I look at all of the aspects of how we engage in the markets as traders. Incredibly valuable things in there. I did a great one on how to deal with slumps, and I think that you would love seeing that. And I do my short-term view. This is the short-term view of the stock market. After this, I record for my members where I look at 5 categories of the market, look at all the momentums in the short term and the kind of micro term, and compare the different futures and different categories within each group. So I'm going to show you S&Ps right now, but I look at NASDAQ and Russell and Dow when I look at it for the members. So all of those videos, more than 250 videos, an immense amount of learning for you that my level 2, 3, and 4 subscribers get. You can become a level 2 subscriber and have a whole month of watching those fantastic videos. 43 years of what I've learned in the markets shared with you, and I think you'll love it. I'm going to make that available to you for half price for a month. Watch all you want, do marathon watching, and then just leave if that's what you want to do, or stay with us and continue to benefit from our work. $16.50. How's that? I'm practically giving it away just so that you can become part of the askSlim family. So I'm going to put a link up on YouTube that you'll be able to grab that on for $16.50, or you can email me, slim@askSlim.com, and ask me for that link, and you can watch all our videos, and you'll become a level 2 member, and you'll really enjoy being part of what we do here and connecting with us. So that's it. And now my short-term view for the coming week. What did I say last week for the stock market? Well, I said that the S&P 500 is likely to dip into midweek and then move back to the upside. My target for that dip was 2403. Go back and watch the video. And then I thought that it would move again to the upside, and so I pretty much nailed the pattern. I had no idea that it was going to blast through what were the resistances and then move up again. We keep seeing higher and higher resistances being challenged and then taken out in this seemingly never-ending magic carpet ride that we're seeing go on in the stock market. So my anticipation, and let's take a look at this chart and you'll see how I came to this, was that the the minor cycle that you see in here, which is the blue dots, I have this highlighted a little differently, blue dashes, is this right in here. And I thought that it would dip down to 2403 and then turn up. That is exactly what it did. I finally got the stock market right? Well, not quite, because I thought it would stop at about 2424, and here we are at 2440 at highs right now for the stock market. So that was some really, really good action that you see there. Now we have some upward projections in here, and people are asking me, now that we got through that level, where do we go? Well, let's just take a peek in here, and you could see these upside projections. There are 2 of them in here. Now, this isn't necessarily where the market's going to go, and the cyclical patterns are not suggestive of it right now. And I think there's going to be a big reversal this week. But the question is, do they panic first up to this area of about 2454, which is that 618 fib extension, let alone this at about 2478? I don't think so. This one right over here is 24, we'll call it 54, 55 right there. If they want to panic early in the week and buy them like crazy, then that would be the level that I would expect. However, the odds are high that we're going to get a downturn this week. We're going to call early peak in the week and then a reversal and then moving down. And I would not be surprised to see it be a down week this week. Then after that, we get into the next rally. Now, this is the time period that I expected the peak to come. It doesn't mean you can't get another test of that level and then have the bigger correction that I expect on the intermediate phase. We're going to look for this week an early failure from somewhere between this 2440-ish level where it is now and 2455, and I wouldn't be surprised to see a big reversal day in there, and then we're going to look for a decline into around June 13th. And then we're going to just have to look at it again. If it remains in a bullish pattern, which would be it holds up on these supports down around 2407, or it would be revised if it makes a higher high, then all is okay, and then we elongate what's going on in here. But if it has a very big decline, and again, I don't know if that's likely or not, we're going to have to wait and see, then it would be more likely that we have something topping. We will call this week early peak for the coming week and then moving down with a likelihood of a down week for the week. That is everything. I hope there was something of value in there. Don't forget, go to that link, become a level 2 member, watch our videos for $16.50. Can't wait to get you in the fold, and then you'll see what we do. And I think it's a tremendous learning opportunity because I put my heart into all this stuff, and of course 43 years of trading in the markets. That's it for today, and I want you to be really careful because, man, it is a crazy world out there. We'll see if this stock market magical mystery tour continues. I'll see you next week, and I'm always wishing you great trading.